Poonam, let me kick it off with you in terms of Amazon. What's jumping out here for you?
Look, it looks like broad-based strength across the board. The retail numbers were particularly good, and that was expected because we had the Prime Day shift moving in from 3Q to 2Q. So overall, really nice numbers here on the retail side. Consumers came to Amazon to shop Prime Day sales, and the shift to online just continues to appear more and more apparent as we move through a tough consumer spending cycle.
What's this third quarter net sales miss? 197 to 202 billion. The estimate was for $204 billion, Poonam.
I think part of it is the Prime Day shift, right? When you think about
But analysts knew about that. So they should have.
We did, but we don't know how much, right? We don't know
Okay.
how much in dollar volume has moved into 2Q. If you look at the beat that we saw, analysts were expecting revenues to be up, but they came in even higher than that, right? 13.7% online revenues was the expectation, and they came in at 15%. So a couple of $billion there could be part of the movement that we're seeing here in the guidance as well.
All right, Anurag, come on in on here. Let's talk about AWS. What's doing pretty well, to say the least?
Yeah, actually, much better than what I would have expected. I mean, going from to 37 in constant currency is phenomenal just because the size of this business is so large. I mean, it's so much bigger than Oracle and so much bigger than Google, but it's a very big beat, frankly. And the biggest surprise for me was the margins. I would have expected margins to go down with all these investments. It actually went up. So, kudos to the AWS team. And we look to hear more about guidance for next quarter and, how much longer can these margins hold up?
Anurag, the AI and chips run rate, the each eclipsed run rates of over $25 billion. Contextualize that for us. As Romain said, a division of a division with $25 billion run rates.
Yeah, I mean, to be honest, I don't really care that much about the AI net number. The number of the chips is the one that I find it more exciting because here is the thing. All these big companies that are spending all this CapEx, a large portion of that CapEx is going to buy GPUs, NVIDIA GPUs. If Amazon can go and figure out their workloads onto their own chips, it saves them massive amount of money and helps them recognize the big backlog that they have without having to give NVIDIA that cash flow. I think that's one of the biggest differentiators between Google, Amazon, and Microsoft is these, the first to have their own chips that people are embracing at a fast pace. Meanwhile, that's not the case with Microsoft.
Yeah, I think it's just fascinating. As I said, I don't always think about Amazon as a chip company, but you got to remember that they are doing this. And increasingly, these big tech guys are doing it. Poonam, come on back in here. Anything here? I know we're still getting information. There's still stuff we're going to get on the analyst call. Anything, though, that you find is maybe something that's worth digging a little bit deeper into and asking about?
I think the advertising business saw a nice pickup, right? 26% growth rates this quarter is a step up from the close to 20% that they've been reporting for the past few quarters. Was that also led by the Prime Day shift, given such a big event moved into the second quarter? Did advertising dollars shift too? And will we see that slow down a little in the next quarter? So I'm really looking to better understand how this Prime Day shift affected and helped 2Q across the board and what it really does to 3Q. They've never quantified it, so we're hoping to get some color.
How big is Prime? Like, how big is Prime Day? Because I know we know from a metrics perspective, but Prime Day kind of started a few years ago as this offshoot of what was it? Alibaba doing Singles Day? Is that what sort of inspired it years ago?
I mean, that could have inspired it, but Prime Day was a once a year phenomenon.
Yeah, and now it's like
holiday, right?
a week.
It's now twice a year, right? So it's really just a move to pull shoppers to spend earlier. So if you think about the timing of Prime Day, right? This time they moved it into June, usually in July. So really capturing spend for back to school, for these peak holiday moments where consumers are looking to stretch their dollars. They're essentially taking the dollars up front and trying to get the consumers to spend it with them versus elsewhere. Does that happen? Yes and no, because around Prime Day, it's not just Amazon that's striking with deals. It's also Walmart. It's also Target. It's also Best Buy. Everyone is having their own version of deals around this day.
Anything to get us to buy. I know how that works. Hey, just a reminder, everybody, we're talking with Poonam Goyal, Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure, Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, joining us. If you have a question, let us know. We'd love to bring you into the conversation. For those who are Bloomberg.com subscribers and terminal clients, Ask a question of our panelists. Just submit questions for our team to answer live on air. Bloomberg.com/Ask Radio. Send them to Bloomberg.com/Ask Radio, and then you can certainly catch their answers live on air with us.
Hey, I want to just look at shares of Roblox real quick, the gaming company, down about 11% in the after hours. Just taking a look at what exactly is happening. Second quarter daily active users came in below estimates, 123 million. The estimate was for 128.7 million users. That was really what missed the average analyst estimate, and that is what has investors concerned. Bookings came in a little shy. Hours engaged came in shy. Revenue did come in higher than expected, though. A loss per share at 26 cents. The estimate was for a loss per cent at 34 cents. Loss per share, rather. Shares down 11.5% in the after hours.
All right, so getting hammered. Going in the other direction, shares of Amazon continuing to rally. Our Spencer Soper out with his story. Amazon reported cloud computing revenue that beat analyst estimates, with booming demand for artificial intelligence services, accelerating sales for the fifth straight quarter. Revenue jumped 37% to $42.2 billion at Amazon Web Services, which generates about a fifth of the company's revenue and most of its operating profit. It was the fastest pace of growth since the fourth quarter of 2021. Analysts on average forecast sales of $40.6 billion, according to data compiled by Bloomberg. You know, Anurag, you have Amazon against the other hyperscalers. What is it that's unique? I mean, you talked a little bit about the chips, and that certainly kind of keeps a lid on some of their costs and their access situation among the chip demands that we've seen out there. But what is it? What is the special sauce of Amazon?
So the first and foremost, it is the largest public cloud provider. It has a much longer history of working with enterprises. So remember, when we talk about AI adoption, you think about ChatGPT app. It's primarily hosted on Microsoft Azure. That's a consumer app. But now you think about AWS and enterprise AI adoption. That's where a lot of large companies around the world would be building their application, or they would be infusing AI into their older applications. So that's a big difference, is the enterprise presence as well as for the Microsoft is on the consumer side. Microsoft does both, but for Amazon, that's primarily the bread and butter. The other thing is they're also the key or the preferred cloud provider for Anthropic. And we have seen a massive boost in Anthropic's use for coding agents. And I think that's also helping AWS in that case. And then if you think, the future of AI is enterprise adoption, Amazon has a lot of data, it has a lot of services. So it's right in the middle of this entire, I would say, AI diffusion within companies.